Scalability across time just means, will a money keep its value through time, or will it depreciate? The oldest fiat money that's in existence today is the British pound. And 371 years ago, when kind of the modern British pound started, it was equal to 1 pound of silver. 1 British pound bought you 1 pound of silver. Today, do you know what 1 pound of silver buys you in terms of British pounds?
I'm guessing that it buys you more than 1 British.
More than 1? A little bit. 174. So you used to buy 1 for 1. Now a pound of silver buys you 174 British pounds. And the key here is to understand what changed and what did not change. Okay, the silver itself did not change. 371 years ago, it weighed a pound. Today, it weighs a pound. 371 years ago, the silver had certain chemical properties. It's got the same chemical properties today. The silver did not change. The fiat changed. It depreciated more than 99%. So silver crushed fiat.
I hate the 99% number. I just hate that one.
Yeah, I just didn't want to take it out to that many decimals. But it's 99.763812. I don't know. It's a lot. It's basically worthless, right, relative to silver. But people talk about gold. What about silver versus gold? And the reality is gold has been far better and far more reliable. It's much better store of value than silver because it's scarcer and it's got a much lower supply growth. Gold grows at about 2% a year. Silver grows about 20-30% a year. So gold is a much better money than silver, but let's compare it to Bitcoin. Gold still does grow. You print through mining, you print gold at about 2% a year, and Bitcoin's on an asymptotic journey to 0% inflation per year. So 2% a year, roughly times 50 years, and gold essentially depreciates completely versus Bitcoin. So Bitcoin will be worth far more than gold in the future once it clicks for people that gold is printed at a much higher rate, and that compounds, much higher, 1 or 2% a year, but that compounds over 10, 20, 30, 40, 50 years. But there's another property of gold that makes it weak relative to Bitcoin. And in fact, this is a property of Bitcoin that makes Bitcoin truly unique among any money in history, which is that Bitcoin is the first store of value ever in which its supply is entirely unaffected by its demand. If we take the example of gold to prove this point, if gold went to, $100,000 an ounce, so up 50x overnight, you and I know what's going to happen tomorrow morning. The miners are going to get to work very early, right?
I'd be mining it.
You and I would drop the phone and start mining, right? We're going to start mining. We're going to look around our house for gold. We're going to melt it down. We're going to drive up the supply. We can't skyrocket the supply, but we're going to drive up the supply. We're going to drive down the price of gold. If during the course of this conversation, people really feel like bullish on Bitcoin and Bitcoin goes to 1 million, I'm just saying that with a smile, what's going to happen to the supply of Bitcoin? Nothing. That's incredible. Bitcoin is the first store of value in human history where its supply is never, can never, will never be affected by any amount of its increased demand. So the conclusion is that Bitcoin is better at being gold than gold because it's more salable across time. Now, the other characteristic about money that's really important is salability across space. Like, can you move the money around the world efficiently? And this is another place where gold has a really acute flaw. It's just hard to transport. Forget paper gold, because then you're back in sort of fiat land and all the problems of fiat. Gold is just hard to transport. And this is where fiat, for all its flaws, and fiat's DOA, but for all its flaws, fiat really shines here. You can move it around the world. And in a sort of an internet world where network power is everything, this ability to sell across space is critical. However, I want to clear up a pretty common misperception, which is that Bitcoin is slower than fiat. The reality is the opposite. Bitcoin moves much faster across space than fiat. The key, though, is to compare apples to apples. Final settlement. And in final settlement, there's no comparison. Bitcoin increases our capacity for final, for example, international settlement by 500,000 transactions a day and completes the settlement with finality in about an hour. In international settlement, you're talking 2, 3, 4, 5 days, 7 days. It can be a month. Depends on the two countries, and you may not get there. And even within a country like ours, Michael, don't confuse the speed of your Visa payment with its final settlement, because it's not finally settling. When you go to Starbucks and buy coffee with your Visa card, no final settlement occurs. What actually happens is your bank and Starbucks bank, they have some credit risk to each other for 2 or 3 days. Usually it's fine, but sometimes with disastrous results. And then there's final settlements. Bitcoin settles every hour, and it's a bearer instrument. It's the first ever electronic bearer instrument. So credit risk is not a concept. We said earlier that Bitcoin is better at being gold than gold. What we're saying now is Bitcoin is better at being fiat than fiat. It's more saleable across space. And because it's not debt like fiat, it has no credit risk. So the conclusion is that Bitcoin is the best money we have. Maybe it's the best money we've ever had. And that's why I've learned the language. That's why I now think in it.
Quoting you again, the single thing that is telling us the hour is late for fiat money, paper money backed by nothing but the goodwill of the federal government, good faith and credit, as the saying goes, of the federal government, that the hour is late for fiat money and central banks is cryptocurrency, and Bitcoin in particular. A third individual hero against the collective is Satoshi Nakamoto. First of all, as you know, this is not my field. Mm-hmm. I thought Satoshi Nakamoto was a sort of mythical, legendary. Nobody actually knows whether this person really exists. Is that wrong?
Well, somebody created Bitcoin.
Oh, and we might as well call him Satoshi.
And he wrote all these papers, and I believe the first Bitcoin payment was from Satoshi to one other person.
So we do know there was an individual.
There was an individual. There's a genesis block of 1 million Bitcoin that are presumably held by that individual, which, at $50,000 a Bitcoin would be worth $50 billion. And so there is a somewhat strange mystery at the heart of the Bitcoin phenomenon, which is still the largest.
So we still don't know.
This person is still anonymous. We don't know who the founder. We don't know who the creator was, and it's sort of it's this hidden anonymous individual, and I think anyway, there's a lot of different things one can say about it, but if you think of Bitcoin, you can think of it as a revolutionary anti-fiat money thing. You can say it's again a late warning, like President Trump's warning on Afghanistan. It's not very nice. It's not very polite, but it's like this is a canary in the coal mine, and it's telling you the hour is very late and you better do something. And so
do you see a potential scenario where Bitcoin could go to zero? And what would the probability be at this point in time? And I know the Lindy effect the network effect, et cetera, has made it better and stronger, more resilient. But is there anything that you believe could take it to zero?
I don't think so. Yeah, I think I'm getting more convinced that it's inevitable that it keeps on taking it moves across and consumes every asset class over time, and it becomes but no, I don't think anything takes it to zero.
So I remember 2020 started with a bang in terms of treasury adoption, and then 2021 has kind of gone out with a whimper. Any idea as to why? You got your Squares and your Teslas and your MicroStrategies all adopting it as a treasury asset, and 30, 40 other companies, but nobody else since then.
I think what you're going to find in behind the scenes is there are a lot of people, a lot of boards. I'm on a bunch of boards. I can tell you this is a very regular conversation. Mm-hmm. And so I can imagine this is happening at a rate we might not see it because we're measuring in too slow and too high a time frame. We want it to happen right now. Yeah. But I bet you going into 2021, nobody would have expected El Salvador to adopt it as a currency. Right?
Seems like time frames are a theme. We need to, as humans, we need to wrap our heads around Lindian timeframes much better to be able to understand this exponentiality of this world we live in today.
Yeah, if you look at the on-chain metrics and you look at the rate of growth of, nothing's changed. Nothing has changed. It's accelerating. And if you and so is the technology that's coming into it. I've been asked a number of times, one specifically about $100 million fund to only invest in it. Would I join as an advisor to only invest in Bitcoin related companies and Lightning related companies? And there's entire network, there's entire ecosystem that's building there. So you can imagine what's happening. And that's one of many. And capital is rushing in because they see what's happening.
I've been watching the capital rushing in, and it's mind blowing, the billions and billions. So that triggers another question in my mind. Do you think layer twos on Bitcoin have a shot of competing with the likes of Ethereum, Solana, Avalanche, etc.?
100%. That's in fact, I can't see. I got to be careful here. I'm totally okay in a free market of people investing in whatever they want in Ethereum and other altcoins. I can't see the long-term rationale for Ethereum at all. I can't see the long-term rationale for many of these. If people wanted to day trade and see tons of risk in that too, but I think Bitcoin and the corresponding ecosystem is going to take it all. So there's a question a lot of people ask about. Okay, so what if we transferred the wealth from these people to these people? What would the society look like? So if you built a credit-based system on top of Bitcoin that looked a lot like the credit-based system today, yes, it would still, if you over-leveraged, it would be wiped out to zero and there'd be no, but you can imagine, it is a simple explanation. Think about just in mining. What if one company could concentrate because of the massive leverage, and they could essentially buy all the ASICs and they could concentrate the network, right, as a result of that massive leverage. So today we're going to have a whole bunch of experiments and people trying leverage and everything else, and comparing one system that requires massive leverage and thinking the system will look the same on the other side. It won't. It's going to, if eventually people are going to pay in Bitcoin, and you want that to happen because it's actually the only way to transfer what I'm talking about with the technology to be able to create broad-based abundance. It's the only way to allow the free market to work.
Yeah. One of the things that keeps me awake at night is people that are dependent on the fiat system. I know a lot of people in their late 50s, 60s, they have maybe $300,000 in the bank, and that's their future. What happens, or are you concerned about people that don't have any Bitcoin? What happens to those people?
I'm very concerned.
Yeah.
In my one of my CEO groups, somebody said 3 years ago, he came to us and he implored us to buy it. Jeff never implores, right? I'm begging people, you must get off zero.
Get off zero, yeah.
Get off zero. Learn about it. Now, don't do it because I said so, but you should question your own bias, and you should get off zero, and look into this more. Getting off zero will at least put a foot in the door, and then you can make some decisions and everything else on how much you want to allocate and everything else. But it's a lifeboat in the coming storm.
Yeah.
And it's a much needed lifeboat in the coming storm. It's really important for people's family, everything else. More important, if people really understand it, they'll understand how they're walking across the bridge to actually take humanity to the other side.
Here's the headline. Half of Miller's personal net worth is in Bitcoin and a few other cryptocurrency investments, and it's leveraged. I asked Miller why he has gone so big on Bitcoin in his personal account.
I'd say it's a combination of things, as it would have to be to allow something to get that big a part of your portfolio, because it goes against many of the tenets of financial discipline. On the other hand, the people that actually are the richest people in the country all are massively concentrated. Buffett and Berkshire, Jeff Bezos, Mark Zuckerberg. So they're not widely diversified. They're highly concentrated, and I think that's because they have a high degree of confidence, or have had a high degree of confidence in the value of those investments. But my thinking here was that I heard a talk on Bitcoin given by the person who's known as Patient Zero in the Bitcoin world, Wences Casares. And Wences gave a talk at the Allen Company Sun Valley Conference, and he led off his talk, this is 2014, I want to say. He led off his talk by saying that, asking how anybody owned Bitcoin. No, nobody in the audience owned it, except for him. And did anybody know what it was? And a few scattered hands went up. And he said, well, let me explain to you why I own Bitcoin. And he said, and it's because I understand why you wouldn't understand it, because you all live in America. And you have a rule of law, and you have orderly governments. And in most times you have relatively low inflation and a prosperous economy. And he said, but I'm from Argentina, and my family's been there 150 years. And we've been wiped out 4 separate times by the Argentinian government, seizing our assets, nationalizing the banks, inflating us out with hyperinflation. And he said, so Bitcoin can't be touched by the government. It's a peer-to-peer, decentralized, independent network. It's a ledger that records every transaction that's public. It's immutable. And he said, so the government, if you have Bitcoin, the government cannot take it away from you. And he said, so think of it as an insurance policy. And he went into it and talked about it. And I thought, and he talked about putting 1% of your liquid net worth in Bitcoin. And I thought that was sensible. He laid out what it could do if it worked. He said then that it was very risky, because then it was about $200. But I bought some then, and I bought a little bit more over time, and it became $500. And then I stopped buying it. And I didn't buy it for years until just the spring of this year. It hit a $66,000 high price. And then in 4 weeks, it was in half. Now, Bitcoin has gone up on average 170% a year for the last 11 years. Now, but that's not every year, it's just an average. It's gone down 3 different times by more than 80%. So that is, a very volatile and therefore very dangerous especially if you're levered, as you can be if you're on some of these exchanges that'll loan you 50 to 1 on your Bitcoin. But each time it's been stopped at around the low 80s level, and it's come back. And this time I started buying it again at $30,000, down from 66. And my reasoning was, there's a lot more people using it now. There's a lot more money going into it in the venture capital world. There are a lot of people who are skeptics who are now at least trying it out. And I thought maybe 50% is a good stopping point for it. But if it goes back down to 80 or 85, I'll buy it all the way down. Well, it did stop right around 50%, and it slowly started its way back up again. But I bought a fair amount at the $30,000 range, and have been adding to various Bitcoin-related investments since then. So there's a company that that we own in our income fund called Stronghold Digital, which is a Bitcoin mining company, where the CEO owns 35%. It looks like they could make $6 to $8 in a couple of years, and they're a very low cost miner of Bitcoin. And all their energy that they're using, the electricity usage, is all renewables, or it gets credits for cleaning up abandoned coal mines. So it's one of those things that, as much as I like Bitcoin, I've bought Stronghold in here and own it also via the fund, as well as MicroStrategy and some other companies.
So it's an insurance policy? Is that how we should look at it? I mean, number one, you don't live in Argentina. You do live in a country, with a rule of law, and I'm not sure the dollar is really a stable currency, but it certainly holds its value. Somebody else could, create another Bitcoin. It's not governed by any rule of law. So, why such confidence in it as an investment, aside from the fact that it certainly has worked really well and more people are kind of jumping on the bandwagon?
There's several different ways to approach that.
Yeah.
I would say that right now, it's best thought of as digital gold. So gold is, as people have said, a store of value for 5,000 years.
Right.
And gold is what people typically fled to when the governments tried to, inflate them out. And in the United States, Franklin D. Roosevelt confiscated everybody's gold in 1933. You had to turn it in or you went to jail. So they can't confiscate your Bitcoin because there's nothing, you hold it securely. As long as you have an internet connection, you can send it somewhere instantaneously at very low cost. And the reason I like the insurance company analogy is because if you think about, people talk about the intrinsic value of Bitcoin. This is a Warren Buffett argument, that Bitcoin has no intrinsic value. It doesn't have any earnings. It'll never pay any dividends. And so how do you even think about something like that? It is a new technology. It's something that couldn't be done before. But in any case, the answer that I have to that is, well, I mean, what's the intrinsic value of that Mickey Mantle baseball card that sold for $5.5 million? It's just cardboard, and it doesn't even have a legend. It could be counterfeited very easily. Or what's the intrinsic value of a Picasso painting, which is just canvas and paint and maybe a frame? But people will pay millions or tens of millions of dollars for it. And so it comes down at the very basic level for supply and demand. So Bitcoin is the only economic entity where the supply is unaffected by the demand. So even with gold, if gold, which is $1,800 today, if gold goes to $18,000, there will be a lot more gold mined because mines that are unprofitable will become profitable. And so gold, which accretes today, the production of gold is equal to about 1.5% to 2% of the total value per year. That's the same accretion that Bitcoin has currently. But this year, 2022, I think will drop below 1.5% on that. So only 21 million Bitcoin can ever be created or close to it. It doesn't matter if Bitcoin is 100,000 or 20 million, there's only going to be that many of them. So all you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. So I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, oh, you're a Bitcoin bull, you own a lot of Bitcoin. I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity, and it's following that very, not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies. And I think it was Stan Druckenmiller said earlier in the year that, and now he owns Bitcoin, by the way, but he said that Bitcoin was a solution in search of a problem. And what I've found amusing about that is every new technology is a solution in search of a problem. Because you have a new technology, then you try and figure out what you're going to do with it. And so, when we created the internet, what are we going to do with that? So the Defense Department had good uses for it, but it was tough for other people to see. But now everybody can see what the value of the internet is. Same thing with the internal combustion engine, which was very dangerous and all, but now that's taken over the world, and now we're going to move to electricity. So all kinds of technologies have to grow into their potential. And Bitcoin is, I guess if you want the theoretical answer to the question, is that's the work of Brian Arthur, Santa Fe Institute, and Stanford, who is kind of the leading authority on what he calls increasing returns economics and what he calls lock-in and path dependence in the economy. So his basic idea is that when technologies reach a certain dominance and they're the leader, it's almost impossible to dislodge them, even without a very superior technology.
And Bitcoin's there? Is that what?
That's what I would say I and the other bulls believe.
Okay.
Back then.
I'll say the same thing I said 6 years ago when it was at $80 a coin, which is it is the single best hedge against the traditional financial infrastructure. Whether you support fiscal and monetary policy or not, it doesn't matter. This is the schmuck insurance you have under your mattress. And
that's kind of by
I've had it
default.
for a long time.
I'm looking at it now at a point where if anything actually has inherent value, that distributed ledgers and decentralization and peer-to-peer and no double payment, that's worth more than the current things that we use right now. You're just using it as default. Do you see what I'm saying, though?
You may end up being a spokesman for like some IBM commercial with that. So it may be true. Just buy the coins. I mean, it's a fantastic instrument just in case. Just in case all these geniuses may not turn out to be geniuses.
Listen, I like Bitcoin, right? Bitcoin is math, and math has been around for thousands of years, and 2 plus 2 is going to equal 4, and it will for the next 2,000 years. So I like the idea of investing in something that's reliable, consistent, honest, and 100% certain. So Bitcoin has appealed to me because it's a way for me to invest in certainty, where, again, I look at the difference between the Fed of 2013, the Fed of 2021. I'm going, how can this, do I want to have faith necessarily? I look at the difference between Trump and Biden. Do I want to have faith in that same reliability and consistency of human nature and the linear nature of human nature, which we know is anything but that?
You like Bitcoin at these prices?
Listen,
you got in what, at about 10,000?
I like Bitcoin as a portfolio diversifier. Everyone always asks me, what should I do with my portfolio? My employees say, I say, okay, listen, the only thing that I know for certain is I want to have 5% in gold, 5% in Bitcoin, 5% in cash, 5% in commodities at this point in time. I don't know what I want to do with the other 80%. I want to wait and see what the Fed's going to do, because what they do will have a big impact.
But let me ask you about certainty when it relates to Bitcoin. I mean, look at what a tweet by Elon Musk over the weekend, arguably, and I know there's an argument about it, pushed it up over 10%. At one point, a couple months ago, it pushed it down. You know,
so I have a lot of friends who are heavily invested in crypto. More power to them. I have a defensive position for myself personally and my family that I just don't even look at anymore. I really don't look at it. I don't think of it, oh, wow, I made X today or I lost X today. For me, it's just a way of kind of foundationally looking at how do I protect my wealth through time. And I think it's a great diversifier.
You see Bitcoin / Lightning as like universal monetary protocol?
Yeah, 100%. I mean, it, and probably beyond that. I mean, there was a time early in Bitcoin's history when there was less of a focus on Bitcoin as that currency aspect and just as that transport, and more on blockchain technology. Blockchain technology is amazing, but the network's power is what people do with it and the use cases. And the use case for the internet to have something like this is, I think, as fundamental as TCP/IP or HTTP, SMNP, which is a mail protocol. So these open protocols create companies, they create projects, they create entirely new cultural and societal shifts that I think ultimately lead to more trust and more transparency as time goes on, and diminishment of all these barriers and boundaries that we've erected. And it's predictable. It's deliberate and it's predictable. I mean, Bitcoin gets a lot of knocks, especially in the mainstream media, the technology mainstream media versus Ethereum in terms of speed of development. Ethereum moves very, very fast in comparison, but it's a question of, what is the ultimate outcome of those moves? Bitcoin is very deliberate about what goes in and what stays out, and that does mean it's slower, but those slower things tend to last, and they tend to be a whole lot more predictable in terms of the direction they're going. They tend to be a lot more secure. They tend to have far better uptime and usability than anything else. And that's not to say that there's a ton of great ideas in the sandbox everywhere and happening in all these other projects. They're great sandboxes that will test ideas very, very quickly. But that deliberateness is what makes Bitcoin, to me, the potential for this internet's native currency, and gives so much confidence as a business owner, as someone running one of these companies, that it's going to stick around, and it's going to serve billions of people throughout decades going forward.
Yeah, you can have lots of innovation at layer 2 with projects that compete against Lightning, or layer 3 with applications that compete against Cash App. But I don't have to speculate about who's going to inherit the Block Corporation in 100 years. If I do business with you now, I have the option to take my level 3 assets to a layer 2 to a layer 1 and give them to my grandchildren. And that makes all the difference, I think.